Your hometown station real estate and financial guides are back on your hometown station, AM 1220 KHTS, to share with you what you need to know in order to navigate the sometimes confusing markets and guide you toward financial wellness. Reach out to them for advice at 855-DON-GINO. And now back to your hosts, Don Getling and Gino Franti.
All right, you have just entered the fourth quarter of our first hour of our holiday special. We have our holiday special with us today, Mr. Chris Ingram. We tend to bring him with us at all the holidays. He was on our Halloween special. Now he's on our Christmas special. You are special.
Hey, thank you.
So are we, though. It's okay being holiday special.
Don, you're special ed.
Oh, yeah, that's true. That's true. But then again, I am your partner. Sorry about that. We appreciate you being part of our show, and we'd love you to join our show again. Always can check us out. All our past shows, there's so much great information on our website at donandgino.com. There's a lot of great interviews, including interviews with Mr. Chris Ingram, always giving us great financial advice, and he's been sharing with us some tax strategies, some portfolio, some investment strategies at the end of the year that can save you a substantial amount of money. But I think, Chris, at the end of every year, is there ever a better time to really think about and restructure your portfolio and know where you're at? I mean, isn't this a great time for them to basically come see a financial planner like you and make sure they're in the right position for the new year, especially based on where we're at with the stock market today? It is, yes. But I'm going to touch on a topic which may say, hey, maybe January's a really good time to do all of that kind of stuff. It's great to start planning at the end of the year, but there's 3 year-end strategies that I want to touch on. And so I'm going to move on fairly quickly because I know we've got some short time here. The first one is we just talked about IRAs. Technically, you don't have to make your IRA contribution until your tax filing deadline of next year. So a lot of people don't know that. A lot of people come to me at the end of the year and go, oh my gosh, I completely forgot I got to put my IRA contribution in. No, you don't. You have until April 15th when you file your taxes to make that IRA contribution. And there's different rules here and there, but typically it's April 15th that is your final deadline. Out there going, so, no, more Christmas money. Now, on the downside, 401ks, the money has to be contributed to your 401k by December 31st. So if a 401k is different than that. So you need to know the difference and make sure you get your contributions into your 401k and don't worry so much about the IRA. The second one is required minimum distributions. So if somebody is over the age of 70 and a half, they're required to pull a certain amount out of their IRA every year. The year that you turn 70 and a half, so if you turn 70 and a half during 2013. This is a problem I hope to have down the line, Gino. Right. When you turn 70 and a half, if you did during 2013, you technically have until April 15th to take your first required minimum distribution. However, I tell everybody, take your required minimum distribution the year that you turn 70 and a half, because the problem is that next year you're going to have to take your required minimum distribution for 2014. So if you hold off until April 15th next year, come the end of next year, you're going to have to take a second distribution from your IRA. Double whammy. And now you just got, let's say each of them was $10,000. Now you have $20,000 of extra income being added to your taxes for the following year. So not a good idea. It can bump you up into a higher tax bracket, can be a problem. So take the first one during 2013, the year you turn 70 and a half, and then take your next one the following year. If you turn 70 and a half, there's a specific calculation on what your required minimum distribution is. It's based on what your portfolio value was back on December 31st of the previous year. So it would be December 31st, 2012. What was the balance of your IRA, and then there's an age factor based on how old you are and what your life expectancy is, and that will give you the amount of the required minimum distribution. You can certainly take more than that amount, but you cannot take less than that amount. You have to take that amount out of your IRA. So call a financial advisor, call me preferably, and I will run a calculation for you, give you an illustration, show you what your required minimum distributions are. It's for IRAs, 401ks. Make sure to get it done because there's some penalties if you don't. Who would have thought that Keith Richards would have ever had to worry about that? He just turned 70. Can you believe that? You watch that guy, you swear he'd never make it past 50. Does he have an IRA? I mean, I think he spent it all thinking he's not going to make it to 70 and a half. I think he drank it all. And no doubt, Jack Daniels. Jack Daniels, yeah. And other things. Right. And self-proclaimed. It's not like he hides it. No. And the guy made it to 70, man.
I don't know.
Maybe
I still don't.
Embalmed.
Yeah. I think somebody's got a little. Well, at the computer age, I don't think he's really around. They just got some little computer guy that shows up. Just goes out and plays.
So that was really good stuff. I mean, and one of the things we were discussing earlier, Chris, was that some people don't even know what an IRA is, and they have a misconception of what an IRA is. So tell us what the misconception is, and tell us what it really is.
Yeah, that's a good question.
A lot of times people think that an IRA is an investment. Yeah, I'm going to purchase an IRA, and it has a predetermined type of investment, rate of return,
like
those
a CD
types of
type thing.
Which, the banks have a version of that. You invest in the IRA and you kind of get a fixed rate of return on it. But an IRA is really just a shell of an account. It determines the taxation of that money, the tax deferral, how the IRS looks at that account. But once the account is set up and the money is funded in there, you can invest it in anything. We can buy stocks, mutual funds, bonds, real estate, all kinds of different stuff. So a lot of people don't know that. They think an IRA it's already set what it has to be invested in. And really, sky's the limit when you put money into an IRA.
Yeah, I personally think the easiest way for me to understand it initially when I was given the concept was it's like a corporation. And you fund the corporation every year. You put funds into it. The corporation invests on your behalf. You really can't take any money out of it. So it's almost like a corporation. It's an independent entity that you fund into every year and that makes investments on your behalf, and then you can't withdraw it until you're 70 and a half. Well, or you have to withdraw it.
You
70
can.
And a half. What's the earliest you can withdraw without penalty?
59 and a half.
59 and a half.
And there's some rules about the Roth that I won't get into, but there's some ways you can get money out of a Roth earlier than that. But typically 59 and a half is when you can start drawing from your IRAs without any penalties. Earlier than 59 and a half, you pay a 10% penalty for early withdrawal.
Which isn't that horrible if you really need it.
Yeah.
But anytime you take money out of your retirement, bad.
Right.
I guarantee that's got to be a hard one for you when you see that happen.
It's very painful. I try and talk people out of it all the time.
Because it's so easy to think that you have an emergency you have to pull out of your retirement fund, and you know what the ramifications are of that, especially compounded over the years.
Right. Sometimes it really is an emergency, and we have no choice. But I see people come to me with so-called emergencies. Yeah, and I try and shed some light on the fact that, a new Mercedes is not an emergency, but, they'll lie to me and say there's something else going on, and then I see them driving around in the Mercedes.
It's good to have accountability partners in all facets, like your accountability partner regarding their finances. Meaning there's the other, somebody looking over their shoulders going, really? Yeah. Just like they're going, really, this cupcake, I earned it. I don't need it. I can eat it. It's not going to affect my waistline.
Right.
Yeah, we all know better.
Yeah. Let me touch on one more thing.
Sure,
I said January versus December, and this is why I say that. Mutual
for
funds.
Planning, for looking over your financial planning.
Correct. So if somebody comes to me at the end of the year and they say, I want to invest a bunch of money, and here's $500,000, let's put it to work. We have to be a little bit careful, because when you purchase mutual funds at the tail end of the year, you can, so a mutual fund, as it's managing the portfolio throughout the year, it may be buying and selling investments inside that mutual fund. So it may have created a very big capital gain or taxability issue throughout the year. Well, if you come in at the tail end of the year, right before what's called the date of record, and you purchase that mutual fund, you may only own that mutual fund for a couple of weeks. And then all of a sudden you're going to get your tax bill saying, hey, you have a big capital gain because you are now a portion of everybody who owns that mutual fund, and you're subject to whatever the capital gains were for that year.
Wow, that's huge.
Yeah, so it's important if you're investing at the end of the year to kind of look at the date of record, make sure that you're not going to be subject to those capital gains taxes. It's not the end of the world, but it's a terrible situation when you own something for a week and then next thing you know, you've got several dollars in capital gains. You go, what are you talking about? I just purchased this thing. Why do I have these taxes already? So something to keep in mind, once you get past December and get into January, then you don't have to worry about that anymore. So sometimes I tell people, hey, I know you're eager and you want to put money into the market right now, but maybe we should wait until after the date of record, or pushing into January, or look at investments that don't carry that capital gains issue.
I didn't realize that about mutual funds. That was a huge tip.
And there's some big capital gains this year in a lot of these mutual funds. So people coming in at the tail end of this year and dropping a bunch of money in mutual funds, they're gonna wake up to a tax bill.
Okay, Merry Christmas, huh? That's not what you want. Well, great advice, Chris, as always, and I appreciate you giving us all this great information. Again, we're sitting here with Chris Ingram with Infinity Wealth Management, located right here in Santa Clarita. What's the best way to get a hold of you again? Because people need to talk to experts, and you're accountable. You do a great job for our clients. We love that.
Call me. I make myself available. I'm 661-255-9555, extension 16. It's the best way to get a hold of me. If not, you can shoot me an email at cingram@nextfinancial.com. That's nextfinancial.com. Or on the web at www.infinitygoals.com.
All right, let's make sure we help you hit your goals for 2014, because this is our Christmas show, and we want you to have a great Christmas next year. And Chris, you can help do that, huh?
I will, yeah.
I mean, that's why you're wearing your Christmas hat.
I am. Go Lakers, by the way.
Go Lakers. Kobe, hang in there, man. All right, we want to thank you again for being part of our holiday special with our holiday treat, Mr. Chris Ingram. And throw a shout out to Shannon Foss, now doing a great job behind the controls. She's still awake, right? There she is. Yeah, and Furman with AP Productions. And we have a great second half of the show on our Christmas special. Thanks for spending your special day with us. Paul Dinkle coming up, RE/MAX real estate professional extraordinaire, good friend of ours, giving you an update on what to expect for 2014 when we come back to the Don and Gino Real Estate and Finance Show on your hometown station, AM 1220.
Happy New Year, everybody.
Happy New Year.